Morning students, nice to be with you today morning. Last lecture, basic concepts we started. I explained basic concepts, and today we are starting with section 2, definitions. We know section 1 is the scope of the act and section 2 deals with definitions. You know the importance of definitions, right? Yes, you know the importance of definition. In the act, different terms are used and we need to consider those words in the sense in which the law expects us to think. अभी हमारा लॉ के अंदर वर्ड्स यूज़ किया है, वो वर्ड्स हम लोग लो को कौन सा मीनिंग में लो के अंदर डाला, वही मीनिंग हम लोग भी समझना होना चाहिए. Consensus at it, meeting of mind, that should be there. So therefore, section 2 of the act or any act explain the terms in detail and then it goes to the next step. So section 2, without much introduction, I am going to section 2. Today we will be looking at Assessee, section 2, subsection 7. In bracket, that is subsection 7. So now the question comes, this section answers us one question: who is an assessee? As per section 2(7) of the Income Tax Act 1961, a person who is liable to pay tax or any other sum of money under this act. A person, who is a person? Person also defined. We will see person after this definition. So, a person who is liable to pay tax or any other sum of money under this act for him or on behalf of somebody else. So, that person is an assessee. So a person become an assessee when he is liable to pay tax or any other sum of money under him, on his behalf, or on behalf of somebody else. Okay. And this section 2(7) also says, yes, assessee includes, yes, number 1, every person in respect of whom any proceedings under this act has been taken. If any proceedings is taken against any person under Income Tax Act 1961, then that person is also called an assessee. Let us take the cases examples. Number 1, whether any tax or any other sum of money is payable by him or not. If a person is liable to pay tax or penalty or interest or fees or whatever it is under the act, then we call that person as an assessee. Secondly, suppose you don't have an income, but a fire occurred, you lost many things. In such cases, your loss also informed to the Income Tax Department through filing a return. We will see the return in the next lecture. Right. So, any person who has sustained a loss and filed a return of loss under section 139(3) is also called an assessee. Now the question is, why should we file a loss with the Income Tax Department? Because next year when you get income, this loss will help you to reduce that income. Set off becomes possible. That is possible only if you have informed the Income Tax Department about the loss that you had incurred. Okay. आपको कुछ लॉस होएगा तो भी इनकम टैक्स डिपार्टमेंट को इन्फॉर्म करने का है. क्यों? वाई? बिकॉज व्हेन यू आपको इनकम मिलने का टाइम, वो ये लॉस आपको यूज़ करके इनकम रिड्यूस कर सकता है. थर्डली, आपको कुछ पेनल्टी इंटरेस्ट देने का है. सपोज फॉर एग्जाम्पल आपका इनकम टैक्स 60 लैक्स है, आप इनकम टैक्स 40 लैक्स पे किया, बट आप चुप बैठा. After some time, the income tax department send a notice asking you to pay the remaining amount. When you pay the remaining amount, not only the remaining amount, but the interest or penalty or fees or whatever comes along with that need to be paid. Clear? So suppose this year you may not be having any income, but last year you paid less income tax. सो ये साल में आपको पकड़ेगा बैलेंस पे करने के लिए. वो टाइम में दैट टाइम यू नीड टू पे, आप पे करना पड़ेगा, उसका इंटरेस्ट पे करना पड़ेगा. 40 लैक्स ही पे किया तो बाकी 40 लैक्स का इंटरेस्ट पे करना पड़ेगा और उसको पेनल्टी पे करना पड़ेगा. ओके, सो देन सच अ पर्सन इज एन assessee. Thirdly, suppose you paid 90,000 as income tax last year, but your actual liability comes only 80,000 that you found later. That means आप 90,000 बोल के 90,000 पे किया, you paid already 90,000 to the income tax department, but now your tax liability when you computed you found that it is only coming as 80,000. So 10,000 is extra in the hands of the income tax department. So income tax department need to give you back that money. So that's called a refund. So if you have to get some refund from the income tax department, then you are also called an assessee. Okay, समझ गया. Now second B case, representative assessee. A person may not be liable only for his own income loss, but he may be liable for the income or loss of other person. Sometimes a person who is not liable to pay tax may be liable to pay tax for some other person. Suppose you are a secretary of the club. Then if the club is having income, then you need to pay tax for that club. You are a representative assessee. Some examples. And in the case of a non-resident, agent of a non-resident is liable to pay tax. Agent of the non-resident is a representative assessee. Clear? He will be assessed for the income of non-resident. Thirdly, suppose a minor is having income. Okay. But in Contract Act, you learn that minor is not competent to enter into contract. Okay, then the guardian of the minor is considered as assessee. He is called a representative assessee. Right? Even suppose a person is lunatic. The contract agreement with the lunatic is void. Therefore, the guardian of the lunatic is liable to pay the tax. So he will be assessed. So he is called an assessee. Now, fourth case is, third C is deceased assessee. So deemed assessee. Who is a deemed assessee? More or less same as that of representative assessee, but it is more deep. The law makes some person compulsorily assessee. That's a deemed assessee. For example, a deceased person. A person मर गया है. ओके, मरने का टाइम क्या किया, एक विल बना के रखा है. तो विल के अंदर क्या बोलता है, ये सामान इसको देने का, वो सामान उसको देने का, ये घर दूसरा उसको देने का, ऐसा ऐसा करके बोल रहे. A person died and he kept a will. In that will lot of details are there. किसको क्या देने का, whom we should go, what should go, क्या देने का, क्या किसको जाने का, वो सब डिटेल्स उसका विल के अंदर लिखा है. So then it will take some time to distribute all his possessions, assets to concerned persons. Clear? Who is liable to get those things. So therefore, usually the will is executed by an executor. Executor is there to work out this will. ये will करने के लिए एक executor होएगा. that executor is called a deemed assessee. Till he distribute all assets to the concerned persons, the income from the property is taxable, and this executor is liable to pay tax of the deceased person's property, income tax. Clear? Okay. Now another deemed assessee. Okay, a person died. He died without keeping will. So in that case, if he dies without keeping a will, then his property, who will look after? His eldest son or his legal heir will take care of the property till it is properly distributed. Those period he will be called deemed assessee of the deceased person's income. Clear? Okay. So we already minor or lunatic guardian, he is also can be called a deemed assessee. Law compulsorily saying that guardian must submit the return for the minor or lunatic. Similarly, non-resident agent of the non-resident must submit the return. समझ गया? Now next is fourth case, last, assessee in default. Who is an assessee in default? If a person fails to fulfill his statutory obligation, then he is called an assessee in default. Okay, look at this. Look into this picture. Here, yes, once you see this side, he is a manager. He put money before his employee and say that, okay, you can take your salary. Then, from his salary, some amount is taken back. Then he asks, why he has taken money from my salary? Then the employee answered, dear, this is TDS. TDS. TDS means tax deducted at source. An employee, before issuing salary to his employees, he is liable to deduct tax at source. If he is not deducting tax at source, then he is called assessee in default because he failed to fulfill the statutory obligation. Clear? This is assessee. Hope you understood who is an assessee. Now next one is assessee, a person who is liable to. Who is a person? So we must, when we hear the word person, we concept person as human beings, individuals. Clear? But Income Tax Act is having a bigger view. Income tax थोड़ा दूर देख रहे. Income Tax Department बोल रहे person, section 231. There are 7 included in person. Individual, HUF, firm, company, association of person or body of individuals, whether incorporated or not, local authority, every artificial juridical person not falling within any of the preceding subclauses. Okay. If artificial any legal person not falling under the earlier cases, okay, 3, 4, 5, 6, then he is called artificial juridical person. Now we will see one by one. An individual is a human being, maybe a minor, lunatic, or major, or a woman, or man, whatever is. Individual, yes, yeah. Human beings are individuals. Clear? A minor can be an individual, lunatic person is an individual, all comes under that. Okay. Now, second case, Hindu undivided family or HUF. Hindu undivided family, here a husband and a wife, Hindu husband and a wife, and their children and their wives and their children. Okay, this is a family. This family stayed together under one roof and work together, earn income, pool it together and distribute among themselves or use it for their well-being. So that's called a Hindu undivided family. Income tax department considers such Hindu undivided family as one unit, not individual separately, as one unit, because all of them are working towards for one objective, one purpose. Clear? So income tax department considers this family as a assessee, and this family will be assessed separately. Okay, right. If any individual is having separate income, not pooled into the family, then he will be assessed separately for his income. That's a different story. But income tax department considers Hindu undivided family as one unit and will be taxed. Now Karta, the eldest person in the family, is called Karta. All others in the family are called co-partners, individuals. Clear? Next, company. Artificial person registered under Indian Companies Act 1956 or any other law. So Indian Companies Act a company can be, you can register under 1956 Act or 2013 Act or any other act which were prevailing in India, or which is okay, or yes. Sometimes what happens, the Commissioner of Income Tax declare you as a company, call you as a company. You are called a deemed company. Okay, you may have registered as a charitable trust. आप एक charitable trust करके register किया है. Okay, so why? Because section 11 of charitable Income Tax Act allows to exempt all the expenses, all the incomes of this trust. So you want to avoid tax. You registered as a trust. But when income tax commissioner looked at you, he found that even though you say you are a trust, but you are like a company, you are making profit, all those things are happening. So therefore, income tax officer will look at you and say that, hello dear, you are a company. Okay, for us, you are a company. You are a charitable trust for you, but for us, you are a company. That is called a deemed company. If any company is registered outside India, foreign companies are also a company in India. Clear? Now firm. You learned about firm. Okay. Partnership agreement. Two or more people come together, agree to carry on business and share the profit or loss. That is a firm. You can register under Partnership Act or not. Clear? Okay. But in Partnership Act, partner and partnership firm considered one and the same, because if there is a liability for the partnership firm, partner is liable for that. Clear? So partner and partnership firm one and the same, but income tax consider firm as a separate entity and tax the firm. Income tax consider firm two types. Okay, one is called registered firm, a firm which fulfills conditions under 184. Secondly, a firm which is not fulfilling the conditions under section 184, they are called unregistered firm. Whether you register under Partnership Act or not is immaterial. Here you must register separately. Sometimes a unregistered firm as per the Partnership Act may be a registered firm here in income tax. Clear? Next is association of person, body of association of person. Who is an association of person? A cooperative society, Markford, yes, etc. are examples of this. When persons combine together to carry on a joint enterprise, they cannot be called a partnership for tax purposes. They are assessable as a association of person. Look at this. Here, two individuals, a firm and a company came together to undertake some activities. When they come together to undertake an activity and they work towards this common purpose and involved in common action, then they are called association of person. Income tax consider association of person as a separate person. Body of individuals means there is no other persons, only individuals come together and they involve in business together. Usually husband and wife may together involve in business. So they are considered as one unit, body of individuals. Okay, then local authority. Municipality, panchayat, cantonment boards, port trust are called local authorities. You know that panchayat, municipality, they are local authority. They are also income tax considered as a person. Then artificial juridical person. A public corporation established under special act of legislature and a body having juridic personality of its own are known as artificial juridical person. If it is not any local authority, or if it is not a company legally constituted, but as per the act, okay, MSRTC, Maharashtra State Transport Corporation, okay, Mumbai University, these are artificial juridical persons. Clear? Okay. Now let us just go through certain cases. Tell me, Reliance Industries Limited, yes, what type of a person is Reliance Industries? It's a company. Punjab National Bank, again banks are company registered under. Okay, Madras University, artificial juridical person. Calcutta Municipal Corporation, local authority. Partnership firm with ABC, a firm. A Brahmin Parivar consisting of Mr. A, his brother B, Mrs. A and Mr. B. You know it's a Hindu independent family. Kalyani Publishers Limited, company. Reserve Bank of India, artificial juridical person. Life Insurance Corporation, again a company. Okay. Mr. Narendra Modi, Prime Minister of India, an individual. Okay. A village panchayat is a local authority. I hope you got it. Clear. So today we learn assessee, person. Two definitions we learn. Please go through the video again and understand this. Yes, and visit our Google Classroom. There I will put some questions on this. Thank you very much for your patient listening.